It is at that moment, it is at that exact moment when the two currencies come into alignment with each other that they have to decide, the buyers have to decide, am I going to take the market or are the sellers asking too much?
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. When you trade and get paid, 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 trade and get paid.
Last week, we talked about how market orders get filled. Right? We talked about that. Right? And how on this side, right? So you have buyers and you have sellers. You have orders that take place in the market. And every one of them has to be paired. So in other words, if the bank decides, they go to doing their business and the bank says, well, I got 1, 2, 3, 4, 5 big buyers. Well, I need to have 1, 2, 3, 4, 5 things to sell them. Right? Now I'm taking you out of advanced class and going back to beginner class. Simple economics. If I have 5 people that want to buy something and I want to make money, I need to have 5 things I want to sell. Right? So what does the bank do? The bank starts gathering. The bank starts doing what they do. They start gathering, and that's what we saw down there was a supply gather. When you see the banks start to go sideways, what's happening is they're trying to balance things out to make sure that a buyer or sellers have what they need. And so that's called supply and demand. Okay. And so demand creates buyers, supply creates sellers. And so what do we do? We have price here that'll end up going up and down, up and down, up and down until this happens. What is this? Well, that means that we paired a seller with every buyer. We paired a seller with every buyer. But in the gathering of supply, as we reached out and got all of our sellers so that every one of our 5 buyers had something to buy, we gathered an abundance. So imagine you put out an email blast and you say, I need 10 people to come help me. I need 5 people to come help me. And you get 9 replies. So now, if you're the bank, you don't just tell the other 4, well, sorry, we don't have anything for you. So we already sold everything. So just go home. No, here's what they do. They realize in our attempt to gather supply, to sell to these buyers, to fill this demand, we ended up getting too much. What happened? Price went down. Because if I have a lot of something and nobody to buy it, price goes down. So what do the banks do? They just say, well, I guess we lose money. I guess somebody's mortgage rates are going up. We'll just lower the rates we give those people who have their little poor savings accounts with us. No, that's not what they say. What do? In a wise, somewhere in the back of their mind, they figure out we need more buyers. We have more supply. We need more buyers. So what do? They put another blast out, and I'm speaking in email terms. And it's not really an email. I'm speaking in your terms that you can understand. What they do is they start gathering more buyers. They say to the buyers out there, here's what we have. This is the abundance of our supply. So they start gathering buyers. And guess what? Buyers start coming. Buyers come, and the buyers say, great, I'll take it. 1, 2, 3, 4. Now we have a match for every buyer. What happens? Price ended up moving sideways down here while they figured that out. They ended up getting too many buyers. So now they have more buyers than they have supply. What happens? Price goes up. If they only have a few buyers, price will go up a little. If they have a lot of buyers, price will go up a lot. Simple supply and demand, right? Now, guess what? Back and forth we go. Those are filled. They go to figuring out what they're going to do. They start gathering and so on and so forth. Now there's more sellers, right? Why is it then that sometimes it's not a drop-based rally or a rally-based drop? What does it mean when it's a, here, let me go back. What does it mean when it's a rally-based rally? What does that mean? It's real simple. Here's what's happened. They have buyers, but they don't have anything to sell them. So they go to gathering. But when their gather is done, they still don't have enough for buyers. They didn't gather enough. So what happened? We got the rally from the abundance of buyers, the base from the gather, and then at the end, there were still more buyers than there were sellers, so we got another rally. This is called a buyer's market. It's like when there's not enough houses to satisfy all the buyers that want to buy houses. So the price of houses continues to go up and up and up and up and up. But when there comes a point where there are more houses than buyers, then the price starts coming down, 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 down. So watch this. There is a point in the market, and some of you have heard me talk about this, called critical mass. And here's when it happens. Watch this. You have abundance. You're looking to sell it. So you find buyers. You're looking for buyers. You're looking for buyers. You're looking for buyers. And then suddenly we get to a place where the number of buyers is equal to the number of sellers or supply. So what happens is we come to a place called critical mass. When you're looking at that on a thing like the, if you were looking at that on, like, let's say the currency heat wave, if you were looking at that on heat wave, you would see GBP, Aussie, right? And what happens as the buyers for Aussie come in, or as the sellers come into the market, Aussie gets bigger. And we would be saying in this place, let me go back a little bit. Right now, we would be saying what? GBP is strong, Aussie is weak. But as Aussie grows in strength, for every buyer of Aussie or every seller of GBP that comes in, right, this becomes to get bigger, and it gets to a point where we see two pieces of the pie that look the same in size. What we see is a growing strength for the Aussie and a weakening for the GBP. Now, it doesn't happen in steps. It doesn't go once Aussie gets to the same size as GBP, then GBP starts losing strength. That's not how it works. This starts getting smaller at the same time as this is getting bigger. Because one, when the transfers of these funds are happening, there have to be orders being filled. So the pound starts losing strength. The Aussie starts gathering strength. Critical mass happens. Grace Dean, watch this. Critical mass happens. What is critical mass? It's when you get to a place that you're at a tipping point, a point of no return. Okay? And so, in other words, if you have a volatility or a strength meter of GBP and it's at 3, and the Aussie is at 1.5, you would say GBP is strong, Aussie is weak. However, as GBP begins to come down and Aussie begins to go up, there's going to come a point, right, where they meet. GBP has now dropped to 2.1 and Aussie is now up to 1.9. Right? It looks even. It's almost there. When they cross paths, and right now, technically, GBP still has more strength than Aussie by 0.2 of a point. But they're crossing paths as these currencies cycle. And Aussie's going to hit 2, and GBP's going to hit 2. And now they're even. That is critical mass. That is when two things are the same, and now a direction has to be set because they cannot stay the same forever. So at some point, either how that plays on a chart is, at some point, either this is simply a pullback and GBP is going to shoot up again and Aussie is going to get weak again and this is going to go, or this is going to be a reversal and Aussie's going to shoot up and GBP is going to become weak. It is at that moment, it is at that exact moment when the two currencies come into alignment with each other that they have to decide, the buyers have to decide, am I going to take the market or are the sellers asking too much?